Hi everyone, Philip Hollett. I'm going to give you a quick November market update. Bank of Canada did their last increase on October 26th to 3.75%, and to put that in dollars and cents terms, the average monthly payment has gone from $1,700 to $3,250, which is definitely a big increase for most people. And lines of credit have been affected quickly as well for the same reason. Prices since March, since those rates started to run up, prices have dropped off about 25% on average. But one thing worth mentioning, first time ever, I'm going to call this a market correction. We have never seen supply drop off during a market correction. So supply did run up, but I'm going to say 3 months ago it actually started to shrink, and it seems to be holding over the last 2-3 months, which has actually put a bottom underneath prices dropping. And that's just the sheer amount of demand here. Some of the record numbers we're hitting on population of immigration, and probably also just the people here already that are still looking for homes. So the other thing to keep in mind is since January of 2020 to now, which is less than 3 years, we're still up 40% roughly on the average price. So it's still huge gains over less than a 3-year period. So I would say this sort of correction probably had to happen. It was completely unsustainable. And nobody really wants to see a bubble and have to deal with bubble territory. The other headline we're seeing is sales volume at the end of October was down 49% over October of last year. Just keep in mind that they're comparing against one of the years of highest sales volume ever, and that was because of the record low interest rate. So I think what we saw basically was borrowing from the future and pulling some of that sales volume back last year, and that's why the other reason why our sales volume looks that much lower this year. But yeah, that's about it. If you have anything specific about your property, I'd love to hear from you and have a chat. Take care.